Hello, good morning. You're watching News9. I'm Shweta Kothari. We're bringing you stories from the world of business, policy and economy. First up, let's begin with markets. My colleague Suyash Maheshwari is here with us in the studio as usual. Suyash, markets opening on a flattish note this morning, in the red perhaps?
In the red. So Shweta, it is turning out to be a bit of a freaky Friday for the markets this morning. After a 1% drop in the Wall Street, Dow Jones fell to almost, saw its worst day fall in a day since March of earlier this year, and Nasdaq ended about 1.8% lower. Indian markets were set to open gap down, and so it did. Indian market now Nifty opened at about 19,250 levels, and Sensex opened below the 65,000 mark. Now this is as of 9:40 a.m. this morning. Since then the benchmarks have recouped some of the losses, and Nifty currently at about 10 a.m. this morning sits above the 19,300 levels. Sensex has also reclaimed the 65,000 mark. Mid cap and the small cap space remains largely mixed. The mid cap index is down marginally at 0.02% at 38,780 levels, while the small cap index is up. It has been an outperformer in the last few sessions, and it is up about 0.18% at 11,940 levels.
All right, our guest Avinash Gorakshakar is also joining us at this point in time. Avinash, good morning. What explains this downfall? And as looking at all the global markets, all the global indices down by at least a percentage point. Nasdaq, Dow Jones, S&P, Nikkei, Hang Seng, all markets everywhere globally down, and India seemed to be reflecting that sentiment this morning.
Yeah, good morning to all of you. See, my sense is, I think, the Indian markets are depicting what the global markets have done, last night. And I think, it's a case of some sort of profit booking, which I think at higher levels is happening. I think we have seen the markets rising significantly since April. And I think the index at a broader level looks to be, now consolidating. We could see some more weakness in the index. But if you look at the broader market, especially the mid-cap companies, the small-cap companies, I think, the Nifty small cap index is definitely showing a good positive trajectory. And there are many companies post the Q1 numbers, which we believe that, appear to be quite attractively priced. So I think broader index, broader market is going to see a much better kind of a upside. I think you are going to see a lot of stock picking activity, taking off. So I think broader level, I think, markets could see a lot of action. I think on the index side, especially the Nifty or the Sensex, would not give you a correct picture of what the, trend in the market is portraying. So I'm not very negative on the markets. Yes, stock specifically, I think you could make a lot of money even at these levels.
All right, stocks specifically, you could make a lot of money. But, before we go to stocks, I also want to know what exactly are you focusing on this morning? Avinash, before we go to what stocks have done well, have picked up this morning, what global cues, trends will you be picking up today?
I think my guess is, now since the earnings season is over, I think the focus on the market would be on the macro numbers, especially the progress of the monsoon and some sort of data points, on the food inflation side, on the broader inflation number side. I think markets are looking forward that post-September, I think, you could possibly see inflation cooling off because the monsoons have arrived a little late, but I think they have been quite significantly better than what the street expected. So I think broadly, I think global, kind of news flows, specifically from the US markets, and obviously, what kind of macro data points come in from the Indian markets are going to drive at least stock prices in the medium term. More importantly, stock specific activities and stock specific news flows are also going to drive. Like there's a lot of action in auto component shares, capital goods companies, real estate companies. I think tailwinds in these sectors are pretty solid. And I would believe that any weakness in the market across these sectors should be used as an opportunity to accumulate. We believe the second half for FY24 should be significantly better in terms of earnings growth trajectory.
All right, and since we're talking about sectors here, Suyash, what sectors are in focus this afternoon, this morning?
So, Shweta, most sectors are trading in the red, barring the Nifty Auto Index and the Nifty Media Pack. Now, if you can see, Nifty Bank continues to remain under pressure. It is down about 0.44% this morning, and it is still comfortably sitting above the 44,000 levels, which will be crucial in the short term.
Okay.
Nifty Auto has outperformed the indices, and it's up about 0.17%. FMCG and Pharma indices, which rallied so we saw some rally yesterday are under pressure too. The metal pack is down about 0.28%. Nifty Media is up about 0.31%.
All right, so Nifty Auto and Nifty Media, they're bucking the trend, but a sea of red we are seeing, Avinash, as far as, all sectors is concerned.
I think, the broad-based selling is largely because of higher levels of profit booking at these levels. I think the market is now looking for fresh triggers. Earnings season is over. I think the market should obviously look at some new trigger, at least in the very near term, to ensure that, there is some sort of buying. In fact, yesterday, an interesting data which I saw was that the domestic institutions bought a very large quantity, in the cash market. But on the other hand, FIs were not very heavy buyers. So I think, a lot of SIP money has been coming in the markets gradually at even these kind of valuations. So I think, as long as domestic money, the SIP kind of flow continues in the markets, I would not be very negative on the markets. This kind of broad selling may be there for a couple of days. But I think coming next week, I think things should again settle down, because at lower levels, a lot of companies, offer good valuation comfort. So I think in the mid cap, small cap, you're going to see a lot of action. Yes, broader market, especially the large caps from the Sensex and the Nifty, look to be fairly valued at this point of time. And therefore, we could not see a very large kind of incremental upside in these large cap stocks, at least in the near term.
Avinash, yes. Nifty Bank has been one of the underperformers in the past 1 month. I think Nifty Bank is down about 4%, whereas Nifty is down marginally at about 1%. What explains this underperformance?
I think markets have been quite skeptical because, the credit growth in the system has been in double digits for a long time. I think most market participants expect that, going forward, the credit growth is going to come down. And that is obviously going to have an impact on the credit disbursements of most of the banks. Specifically, if you look at the PSU bank index, I think last week was a fairly good kind of week for the PSU banks. But before that, I think, and a little before that, I think you see that most of the public sector banks, despite good quarter 1 numbers, very strong management commentaries, very strong kind of profit performances, were still down. So my sense is, now the market should look at the, July to September quarter. Hopefully, if the credit growth remains in double digits, then I think that would give a little more confidence, because, corporate capex has been picking up, retail demand is growing. So I think definitely banks are going to play a pivotal role. I think the larger banks like SBI, Bank of Baroda, Canara Bank, even the larger private sector banks like, Indusinn, Axis Bank, ICICI Bank, I think these are all good bets in the current scenario, because, these are banks where we believe the balance sheet increase is going to be quite significant and asset quality is now well under control.
All right, and since Avinash, you pointed out at a lot of factors that could be triggering, either a sell-off or a buy in the market. One of them would, of course, be inflation. Inflation has also been flagged by RBI's minutes of the meeting that came out yesterday. Headline inflation likely to remain, and this is, of course, the MPC overall view of MPC, that headline inflation will, of course, remain high. There will be a spike in the month of September as well. In direct contradiction, for that matter, from what RBI governor has been saying. He's been saying, and in fact we did quote him yesterday, saying that inflation, and specifically vegetable and pulses inflation, will come down in the month of September. But as far as inflation is concerned, the overall view there seems to be a dampener, gloomy view of how inflation could affect markets.
I think, headline inflation is going to remain elevated for some more time. It's not going to get, subsidized in a very significant way in a very short period. So I think probably, the month of September also we could see a little more kind of inch up on the inflation number side. But post September, I think the second half is something which we look forward to, and I would personally feel that sectors like FMCG, sectors which are largely rural oriented, I think would definitely benefit. In fact, in the first quarter we have seen moderation in volume growth for most of the FMCG companies, largely because of the inflation factor. So I think this is definitely going to be a key monitorable. You're right in saying that in the very near term the markets are concerned, but I think the markets are looking forward that with a good monsoon, hopefully, I think food inflation would come down, and I think that would obviously, bring down inflation, which is as per, RBI's comfort. So it's going to be a better second half according to me.
All right, I'm wondering how much monsoon is good monsoon, because at this point in time, it looks like too much monsoon, too much rainfall, perhaps also affecting supply chains. We're seeing visuals of, houses falling like a pack of cards, like dominoes, coming in from Himachal Pradesh. So obviously a supply side disruption is expected in the month of September. Hopefully it gets better, but globally as well, markets are going to wait up for important cues.
Because Jerome Powell speaks today at the Jackson Hole Symposium. The expectation is that there will be some clarity as far as Fed goes, whether it will raise interest rates or not. What are your expectations? What are you picking up?
No, I think at least the broader expectation is that Fed is unlikely to cut interest rates in a hurry. I think Jeff Powell is very clear that unless inflation comes down to manageable levels of 2%, some further 1 or 2 interest rate hikes are definitely possible. And I think this is now getting more and more crystallized and getting clearer now as time goes. So my sense is that the markets are already factoring in at least a couple of interest rate hikes, and I think till that time, I think markets are going to remain volatile. They're going to remain a little patchy. Most importantly, globally, if inflation doesn't come down, I think that is also going to have a rub-off in India, because clearly I think markets are waiting for the interest rates to subside, to come down, because that would be a big booster for the corporate sector. So my sense is I think it's at least another 1 or 2 quarters away before we could see interest rates actually softening and inflation levels moderating.
So Avinash, will it make sense to maybe step away from equities at this point in time?
Yeah, I think the best time to invest in equities is when there is uncertainty. You must have heard the saying that the right price and the right news never comes at the same time. So you get good companies at good valuations only during difficult times. So I think when you want to build a portfolio, I think it's always better to look at companies from a longer term vision. Maybe the next 1 or 2 quarters could be challenging for the market. We have seen a very sharp rise from April onwards. But if you're looking at the next couple of years, I think my sense is that one should not lose an opportunity just for 1 or 2 quarters. We have been telling our clients that try to build in portfolios gradually, maybe not immediately, and adopt an SIP approach, but definitely don't ignore the equity markets completely.
Any particular theme or sector that looks interesting to you at this point in time?
Yeah, I think we have been very clear that domestic facing themes are going to do much better than the export oriented themes. We are not very positive on IT because we feel that headwinds would continue to challenge the sector. But I think domestic themes like capital goods, domestic themes like auto components, something like building products, these are themes which we feel we should do well. Even cement, according to us, the second half of FY24 should be a lot better because with infrastructure investments built up by the government, cement is the first building block. So I think cement is also one sector which is showing a decent amount of pricing power. So I think these would be the sectors where we would say that any correction in the market would be used as a good opportunity to accumulate good quality stocks.
Okay. Avinash, before we move to stock specific action that Suyash has been tracking since morning and get your views on that, I want to quickly also understand from you, do you agree perhaps with various rating agencies as far as, the Q1 growth is concerned? ICRA to SBI report pegging the Q1 growth at 8.3 to 8.5% and also predicting that this will substantially be lowered in the second quarter of this financial year. Do you think the second ongoing quarter, the second quarter is going to be perhaps a dampener, or you believe that second quarter, because you've been saying, and since I've been listening to you for the past 10 minutes, you've been very positive and optimistic about the ongoing quarter, the second quarter of this financial year. Are you still as optimistic, or do you think this is going to be perhaps a slight dampener as opposed to the growth that has been projected in the first quarter?
Yeah, I think even if the growth does moderate in the second quarter, let me tell you, it's going to be a base effect. So I think numbers prima facie are not going to be bad, but yes, the base effect, if it plays out, that could obviously impact the growth rate numbers. And my sense is that looking at last year, I think this year, hopefully, I think for the full financial year, that is for FY24, we have been seeing a lot of corporate activity. We have been talking to many companies. Our sense is that now corporate activity, especially on the capex side, has improved significantly. So I think you're going to see a lot of action on the corporate capex side. And to that extent, yes, the second quarter number, even if it is a slightly dampener, one would say that this is definitely a good consolidation kind of time. Markets have rallied from April, as I said earlier. So the markets would take a soft breather as of now. And today the problem in the markets is that not only quality blue chips, but even penny stocks have moved up significantly.
Okay.
So I think now is a time when you're going to be extremely selective on your stock specific strategy. I think only quality stocks and with good balance sheets, with good earnings growth numbers are going to be, obviously re-rating candidates. The other companies which have risen purely on sentiment and possibly on some news flow are unlikely to, sustain that momentum. So I think yes, broadly we are ready for a difficult second quarter, but I think that is also an opportunity in itself. So I think equity is a long-term asset class, and we have been telling our clients that you need to give time to the market. There are times when the market consolidates, it does not perform as per your expectation, but longer term, I think there's a lot of money to be made in the markets.
All right, a lot of money to be made in the market. Likely consolidation in the second quarter is what Avinash is predicting at this point in time. Let's also understand what stocks are in focus this morning, Suyash.
Certainly, Shweta. So PayTM was one of the stocks that I was tracking this morning. Antfin, which is a promoter group of the company, is expected to sell about a 3.6% stake in the fintech major. Now Antfin will sell the stake at a price of about 880 rupees, which is a discount of about 4% from current levels. Antfin, which was the majority stakeholder in the company, has been reducing its stake over the past few months. Now earlier this month it sold about a 10.3% stake to Vijay Shekhar Sharma, and now Vijay Shekhar Sharma is the biggest shareholder in the PayTM stock. Now PayTM stock has been active at least in the past 6-7 months or so. In 2023 alone, the stock is up about 70%, and we saw about a 6 or 7% rally in PayTM stock yesterday. Coforge was another
Let's
stock
also
that
quickly get in Avinash to talk about PayTM, because PayTM is an interesting, important story unfolding there. PayTM, there seems to be some sort of rebound in the PayTM stock there. 197 communication up almost 15.3% in 1 month. In a week, 6%. What are your views on 197 stock at this point in time, Avinash? Is it a buy? Is it a sell? What happens here on?
I think see, PayTM has done one good part, is that there's been a lot of focus on cost optimization, and I think that has clearly got reflected in the Q1 numbers. In fact, now the markets are clearly waiting for the September quarter, where the management had clearly hinted earlier that they would become EBITDA positive. And I think if that happens, you could see a significant amount of re-rating. On the business side, if you see the gross merchant value, if you see the disbursements the company has been doing on the financial services side, I think clearly a big shift has happened on the financial services side, because the payment business continues to be extremely competitive. So I think, investors who have at least a 2-year kind of time frame would definitely look at buying the stock, because this is now getting more and more clearer that the company is a dominant player in the fintech space. They have been trying to get on very significantly on the financial services side. So I think, despite the kind of, disastrous kind of performance which happened post listing, I think now the company seems to be taking care of that. Cost optimization is the watchword for them. So I would believe, yes, from a longer term perspective, at least a 2-year time frame, one could definitely look at, doing an SIP in the stock. Longer term, I think it's going to be a great story. But yes, it's going to take a little more time rather than what the market expects.
All right, PayTM there, of course, doing better than expected at this point in time, trying to be a profitable fintech company. Back in the game, as some would say, after having been dethroned by its competitors in the past 1 year.
Definitely, Shweta. The stock has performed really well. Even the company's financials are improving. The company was able to narrow its losses in the previous quarter. And in light of that, Bernstein has given a buy rating on the stock. It has a target price of about 1100 rupees, which is about 21% higher from current levels. Now, the global brokerage firm expects PayTM to have a significant share, about a 4% share of the digital lending space.
Right.
Also, the fact that the company has been reducing its shareholding of Chinese companies, and Vijay Shekhar Sharma has been upping his stake, and now his stake is currently at about 20%, is giving some sort of confidence to investors.
To investors, of course. And another stock that is in the radar is RIL. This morning, RIL stock, let's pull up that graphics once again, down this morning?
So Reliance was down marginally this morning, but the stock has since recovered and it is trading about flattish currently. Okay. Now Reliance Industries has been in the news for the last couple of days. Earlier we heard about QIA, which is Qatar Investment Authority, investing about $1 billion in the retail arm of the group, which gives Reliance Retail a valuation of $100 billion. Another news that was making in the rounds was that Reliance Retail is also looking to monetize its logistics and warehousing assets through an InvIT of about 3,800 crores.
Okay.
Now RIL is said to have entered into an understanding where it will jointly manage 3 properties across India and the UK with Oberoi Hotels. So the stock has been making headlines, but the stock is actually under pressure. What explains the selling in RIL stock, Avinash, if you could enlighten us?
I think, you see, in the short term, I think it's very difficult to quantify. But as you rightly mentioned, I think the forthcoming Reliance AGM is now going to be a key trigger for the stock in the near term. Market expects that some announcements could come on the retail venture. Now, since the Jio Financial business has been demerged, it's been separately listed. I think the next trigger point for Reliance would be the value monetization of the Reliance retail business. And I think now this 1% stake, which has been sold, clearly indicates the kind of valuation angle for the retail business. My sense is that any commentary or any comment by the top management on the Reliance retail, monetization theory going forward would definitely mean a significant amount of re-rating for Reliance. Our sense is the oil and gas business would continue to generate steady cash flows and profit, but the real trigger for Reliance would come in from Jio Financial Services, the telecom business, and the retail business. So I think it's better to wait for the Reliance AGM, but I think a lot of fireworks could come in if possibly some announcements on these entities are made, specifically on the retail venture, which I think is now getting ready for monetization, at least over the next 12 to 15 months.
Now, Avinash, since we are talking about Reliance Industries, we also need to, I think we should talk about Jio Financial Services as well. The stock is down about 5% in the lower circuit for the 5th consecutive session, trading about 202 odd levels. What's the bottom for the stock? When will this sell-off end?
Yeah, I think it's very difficult to quantify this, but one logical reason for this is that index-based funds, the stock is out of the index. So I think you're going to see a lot of selling continue till the time this index-based fund selling does not end. See, we have been telling our clients that fair value could be around 185, 195 odd levels. And I think looking at the longer term trajectory of this business, Jio Financial is something which is going to create a massive disruption in the financial services space. Already they have tied up with BlackRock for the asset management business. And I think you're going to see a lot of disruption in the other financial verticals like wealth management, broking. So, it's only a matter of time. So I think, somebody who wants to take a longer term call should not bother about the value, because if the balance sheet size of almost 1,60,000 crores, it's going to be one of the large, NBFC players in India. And I think Reliance is known for disruption. It is known for price undercutting to grab market share. So I think over the next, say, 1 to 2 years, I think you could see a lot of value getting unlocked. But yes, in the near term, these kind of things would continue till the stock stabilizes.
In fact, if you track Jio Financial Services stock this morning, it's down about 0.5% to 0.6%, so it's trading in the range.
10-15,
so at
there was
about
a sharp rebound.
10-12 to 10-15, there seems to be some sort of rebound there, Avinash, as far as Jio Financial Services is concerned. On the 5th day since we've been reporting stock hitting lower circuit every day.
So now 202 seems to be a short-term support for the stock?
So in fact, see, I think I was reading a report saying that even LIC has accumulated shares of Jio Financial. So, obviously big hands have come in the counter. It's a matter of time. See, I think once the stock stabilizes, I think clearly the markets would start looking at the kind of the narratives and the kind of opportunity for growth. Because, see, I think the NBFC business is going to be scaled up significantly. Reliance is not going to be a number 2 or number 3 in this business. They would definitely aim to become number 1 over the near, medium to long term. So I think you're going to see a lot of news flows, and I think the bigger trigger for this stock will come when the company starts talking to analysts. They have their conference calls. So that is a time when you're going to see a lot of institutional interest and retail interest in the stock.
And how is Jio Financial Services, at least in terms of valuation, since we don't have clarity about much clarity about its business model, in terms of valuation, how is it stacking up against its rivals like Bajaj Finance?
I think my guess is, I think whatever data points we have till now and whatever research reports we have read, I think very clearly the markets are looking at the fact that a 1,60,000 crore balance sheet itself is a very big kind of a, growth driver for the company. Maybe in the very near term, it's very difficult to quantify at what kind of price to book it trades. But, today a Bajaj Finance trades at almost 5 to 6 times, a Poonawalla Finance trades at almost 4.5 times, price to book. So I think looking at the pedigree of the company, looking at the balance sheet size, I would not be surprised that, once more data points come in, we could see similar, valuation kind of multiples for a stock like Jio Financial. So I think, a fair value could be about 250 to 275, at least in the very near term. But I think more data points are needed to actually give a precise kind of validation and a logic for, the kind of upgrade. So I think it's better to wait and watch for at least a couple of quarters. The stock has got listed. I think you're going to see quarterly numbers, commentaries from the managements. So that itself is going to play a very big role in ensuring that, then obviously earnings and, valuation multiples would get discounted.
All right, Avinash, I think it's time to let you go. But before we do that, what other stocks are in action, Suyash, this morning? What should investors be looking at? What should they be tracking?
So, Shweta, Coforge was another stock that we were tracking in this morning. Now, the promoter entity has sold its entire 26.63% stake in the company for a consideration of about 7,600 crores through bulk deals. And the stake has been picked up by marquee names such as SBI Mutual Fund, Aditya Birla Mutual Fund and Kotak Mahindra Group. Another stock was the Adani Group of stocks. Adani Enterprises, as we can see on the screen, was down marginally in the morning. However, the stock has recovered a little. Now, Adani Group, as per reports, is sitting on a cash balance of about 42,115 crores, which is the highest cash balance since the inception of the companies, and it was held by a series of strategic events. Now, the net debt to operating profit ratio also has fallen below the 3x levels, and this is the first time that it is below the 3x levels in a decade. Another big update coming from Adani Group is that the total equity deployed has surged to 55.77% of its total asset. It is a significant rise from about 40.16% that it stood at the end of financial year FY19. And the group has given a guidance that it expects that the equity deployment will touch about 2.36 lakh crore by the end of this financial year.
All right, those of course are big stocks in focus. Suyash, thanks very much for joining in with your inputs. Also, Avinash Gorakshakar, thanks very much, sir, for taking time out for joining us this morning with your inputs on that story. But Adani, as we continue to track Adani, Suyash, and also I'll request my colleague Karthik to walk in. Adani and the ghost perhaps of what has happened in January, which is the Hindenburg report, could come back to haunt us. We're given to understand George Soros, the American billionaire known to fund some very radical causes, one of his investigative agencies are now pointing at a report that could come our way, could affect Indian markets. Perhaps it's going to be another story like Hindenburg, like Adani. We don't know what just as yet, but it is likely to spook a lot of companies today.
So, Shweta, I think what happens is that every time, there is a name like an investigative report, or there's a name like George Soros, or there is a report that says that, hey, there is going to be a listed company under investigation, all antennas, rightly so, go up, right? Now, obviously, this is a story which has not been detailed out yet. It's a source-based story done by PTI, the Newswire agency, Press Trust of India, and there is absolutely no details available yet. So I think it will be incorrect to speculate which company this may be, what could be the scale of manipulation, if at all there is any, what could be the scope of the investigation undertaken by the George Soros funded company. And of course, George Soros is somebody who is quite, if I can say, hated in India after his remarks that came out soon after the Hindenburg Research, where he had accused both Prime Minister Narendra Modi and the government of India to be in some sort of a collusion with hand in glove with the Adani Group. And the Adani Group and the entire Adani, company, the parent company as well as the group companies were all, being investigated at that time by SEBI, and that investigation in fact continues, and we were hoping that some sort of fruition of that report would have come on the 14th of August. It did not. Another 15 days, 29th August is when we are waiting for the SEBI report in Supreme Court to come out, giving some sort of a way forward when it comes to Adani Group stocks. Adani Group stocks, of course, have seen tremendous buying, tremendous inflows of investments from Indian as well as global partners, more so global. And every day we are seeing some sort of a stock price movement on Adani. We've been tracking that. So which company is George Soros referring to?
We don't know.
Or the investigative agency funded by George Soros referring to? I think it'll be very, very speculative to take any name. I have some ideas. I'm sure you do as well. Soyash does. Everybody there watching the show or anybody who's read this report would be drawing some conjecture in their minds on which company this could be. And could this result in another massive sell-off? Could we see a bloodbath on the Indian stock markets? We don't know. I think it's going to be incorrect to speculate right now. But let's just hope that, I mean, no matter what company is being referred to here, let's just hope that this is not something which which plays with stakeholders' money, shareholders' money. It should not be a company that India has invested faith and trust in addition to the money of retail investors, and hopefully nothing major should come out of it that spooks global investors and makes them wary of investing in Indian companies as well.
And this, of course, the agency Organized Crime and Corruption Reporting Project, which was founded in 2006. It is funded by George Soros and Rockefeller Brothers Fund. So a lot of antennas will be up. And the moment we take George Soros's name, because he is, of course, hated also for his very anti-government remarks that he has made in the past, anti-Modi remarks to be particular, that he's made in the past. Now, Soros is an American financier. He has anti-government views which are well known. He's also an institutional donor in this project. OCCRP, as the acronym goes, is set to report on organized crime. It publishes news articles in the media thereafter. So they'll first come up with a report. Whenever they do, they'll then be followed by news reports, and all of that, of course, hinting at what could be in making for an Indian conglomerate, a company. We don't know whether it's going to be big or small, but all eyes on whether this is going to have an impact perhaps on the capital market like the Hindenburg report did. And all in all, I think it's the people who lose their money in a sense after that sort of report. So again, I think all speculative at this point in time.
All speculative, all source driven, and hopefully something should come out in terms of at least putting an end to the speculation. But the magnitude of that, of course, we don't know yet.
But I think it's also interesting to point out before we move on, when such a report comes out, it has an impact on investors. It has an impact on the common man, people who are invested in a company, who are invested in the capitals market. They lose money all in all. So I'm not sure whether there are enough stringent provisions in place already to protect people whose money is lost in process, which is what happened in case of Hindenburg.
So I think many people advise investors when they are entering the stock market that, hey, this is at your own risk. Stock market investments are subject to market risks, right? I think every disclaimer out there states that very clearly, fast, slow, whatever, but I think it's been used so many times that it has become part of lexical usage. I mean, it just flows out very, very easily. So the point is, yeah, SEBI's job is to protect the investors. Its job is to ensure that there isn't any stock price manipulation, there isn't any greasing of palms, any underhand dealings, any short selling, any vested interest sort of playing into manipulation or movement of share prices. So the job of any market regulator, SEBI in the case of India, SEC in the case of US, every economy, every capital market has got its own regulator, and the job of the regulator is to protect and ensure that that shareholders are not subjected to any undue risk which arises by way of lack of corporate governance or rules of the land not being followed. That is SEBI's purpose of existence.
And now, the mandate, yes.
Now, of course, in case there is a company we're talking about, what happened in the case of Hindenburg, for example, of course, a lot of people, when the stock prices tanked, a lot of retail investors must have lost money, right? Because they may not have timed the market in a way that they sold it before the Hindenburg Research, or might not have held on to the stock because it has bounced back, not at the same levels as we saw in Jan, but stocks have reasonably bounced back from its lows in Jan and Feb. So I think, again, it's a complete function of playing the stock market game, being a long-term investor, not just looking at technicals, but really looking at the fundamentals of a company, looking at the entire environment around a particular industry. And if you're not an expert yourself, seeking professional advice while making investments.
All right.
So as long as all of that continues to happen and there is SEBI's vigil on no malpractice when it comes to manipulation of prices, shareholders by and large should be protected. But of course, there are going to be one odd black swan events like these every now and then.
We're waiting. Hopefully, this will have less damning impact on Indian stock markets, on whichever company perhaps George Soros and the project that he funds will expose. And we don't have a timeline just as yet. So all of it in the realm of speculation at this point in time. But what is not in the realm of speculation is India's growing and fundamentally strong macros. We now know, and in fact this has been restated again and again by the government, this time by Commerce Minister as well, Piyush Goyal coming out saying that trade deficit is in fact narrowing and exports are likely to grow in months and years to come. And we've been talking about a narrowing trade deficit here on Newsline, but that's also on the account of the fact that even as exports are and exports largely driven by demand in markets all around the world has been low, the imports have been also low, which has resulted in net a gap between the exports import narrowing and trade deficit narrowing henceforth. But he's also now hinting at perhaps exports growing in months to come.
So that is what is quite interesting, Shweta, that it's great to make lofty statements and it's great to have expectations of the export story picking up, but is there data to support that? Because Minister Piyush Goyal at Jaipur, which is the hub of gems and jewelry per se, had said, and he's right technically, that the trade deficit is narrowing. But like you said, the trade deficit is narrowing not on account of India importing less and exporting more, but on account of India importing less
and also exporting
but exporting also less. It's just that the quantum of or the degree of percentage of how much lesser we are exporting is a little higher than the degree of reduction in import. So as a result of that, the deficit is narrowing. Right, your deficit has narrowed from, let's say, 24 billion in the month to about 20 billion or so. But that is not on account of a great robust export story which is narrowing it. It's overall the volume of trade is coming down. So you could be bullish and you could take a stand saying that, hey, all the global partnerships that we are inking and all the large marquee events at a global stature that we as the nation are leading or representing. Remember, I mean, India is of course the president of G20. And you have the B20 starting today in Delhi, which is the Business 20. And that is going to see a flurry of corporate leaders and government voices. In fact, even Prime Minister Narendra Modi is due to visit the B20 summit on this Sunday, coming Sunday. So the point is that, your whole journey of growth of GDP cannot rest only on infrastructure spending by the government. There has to be all the components that go into GDP growth. If you look at them, there has to be consumer demand. So a solid pickup in consumer demand, capital investments by private enterprises, and a narrowing of trade deficit while increasing that whole X minus M balloon, which means your exports need to grow at the cost of reduction in imports. You need to be a self-reliant economy. You don't see much of that actually happening in the economy right now. So a great story around narrowing trade deficit, the numbers don't support real economic growth. And in an overall environment which is stressed, which is pressurized right now with discretionary spending taking a beating, exports of gems and jewelry, for example, an industry that the minister had spoken about specifically. Gems and jewelry, one of the largest markets that India exports to happens to be the US. Now, within US right now, you have a massive inflation, you have rate hike, liquidity is being sucked out of the markets, and as a result of which, gems and jewelry obviously is as discretionary as it gets when it comes to consumer demand. So demand for gems and jewelry is low. Now, are there any indicators right now that suggest that this demand is going to pick up in the near future? I doubt it. So, if we can pull up the quote of Minister Piyush Goyal also and show that to our viewers, to our audiences, I think it's important to note that it's a statement that comes without data. He's saying all in all, trade continues to be robust. Our trade deficit is falling rapidly, and India will continue to benefit significantly from our global outreach. But where is the data to support that? Great to be part of G20, presiding over G20. Great to be, at BRICS and trying to expand that entire trade bloc and that entire, cooperative bucket beyond the 5 existing countries and adding another 6 countries to it. But India has to ensure that its exports grow. And these exports, incidentally, I'm talking about manufacturing. I'm not specifically talking about services. In services, our PMI has been much higher than manufacturing. We have seen exports grow year on year when it comes to services. And on manufacturing, which is your merchandise exports, we've actually seen export contraction for 6 consecutive months. And at the same time, we've also seen import contraction for 8 consecutive months. So there has been overall fairly tempered down, slowed down trade between India and the rest of the world.
So while we can control a lot of imports, exports is not something we can really control. There is a problem there with what's happening with global economy.
You've got to make manufacturing competitive.
Yes,
you've got to be able to offer quality and prices. Of course,
there has to be more demand, which is not what Indian government can control at this point in time. Which is what I think it's interesting to point out. In that same statement, Piyush Goyal also pointed at growing inflation, less likelihood of a higher demand in major economies, including developing economies, at the same time saying that he is bullish on exports. I'm not sure where the data comes from overall. All right, so that of course is the big story that we continue to track by the way of government's increase, or rather an impetus on narrowing trade deficit at the cost of course imports falling, but exports also declining massively. But moving on to a story that we're tracking, and we're tracking in fact since past 2 days, and that is with respect to what happens if you don't ask for your bill, rather what happens if you ask for your bill when you ask for a service or someone renders you their service. The government has come up with a very interesting bill called Mera Adhikaar, which means that there will be an incentive to you asking for your bill, which could be up to 1 crore.
Absolutely. And
this is, I mean, it's mind-boggling.
You don't need to participate in a game show anymore to win 1 CR. All you need to do is, technically, to be eligible, ask for a bill the next time you go shopping. And once you have that bill, all you need to do is log on to the government's portal. In fact, there's an app also for it, Mera Adhikaar. I downloaded it this morning just to see what it looks like. But it's going to get activated only on the 1st of September. So the notification that comes as soon as you download and launch the app, it says that the service is going to start on the midnight of 1st of September. So come 1st of September, very interestingly, citizens of India are eligible to become crore-patis. 2 of them could become crore-patis every quarter.
Okay.
10 of them could become millionaires or lakh-patis every month.
Okay.
So 10 winners every month can win 10 lakh rupees of cash prizes. 2 winners every quarter could win 1 crore rupees worth of cash. And cash, not cash prizes, cash, pure hard cash. And 800 winners every month could win 10,000 rupees in cash deposited to their accounts, DBT. And it comes simply on account of ensuring and hoping that there is greater compliance and there is greater pressure on sellers to give a hard invoice, a physical bill with a GST number, an invoice number, the value of the transaction, the date of the transaction, very clearly to customers. So encouraging customers to go out and ask for bills, putting the pressure back on sellers of all scales and sizes to provide a formal bill to customers. And once customers have that bill, all they need to do is log on to this government developed portal, put in your details of what you have bought, how much you've bought it for, the GST invoice number, the GST number of the seller, the state that you belong to, because right now this pilot is going to be launched only for a period of 12 months and only in about 6 states, 3 states and 3 union territories, right? So that is where this pilot is being rolled out right now, ensuring that there is greater compliance for GST and there doesn't get any better a nudge or incentive for customers to go out and ask for a bill. Now, a little bit of catch here. The transaction
I was
value,
hoping that you'll come to the riders.
Not too many, honestly. From what I've read, it seems like a fairly customer-facing professionally rolled out, well thought through plan.
Okay.
And it isn't much. I mean, you look at India's GST collection, we are averaging 1.6, 1.7 lakh crore rupees a month in GST collection. By way of this, if that compliance goes up, what does it cost the government to spend, let's say, 10 into 10 lakh rupees, 1 CR a month, plus 2 CR every quarter, plus 800 into 10,000, whatever, you know, I mean, it's not going to be more than a couple of crores a month to spend on this sort of dole or this cashback to customers by way of encouraging more and more sellers to register for GST and file their GST returns accurately. So this matching will be done at the government's portal, that, you know, it's the correct bill, right invoice, right value, right GST number, okay, you're eligible. Now, the catch for customers here is that your bill needs to be of at least 200 rupees of transaction. And as a customer, the best you can do is load up to 25 bills a month, no more than that.
Okay.
These bills
25 is still a lot.
25 is quite a bit, 1 bill a day roughly, right? And you upload these bills, or you sort of put in the details about your transactions by the 5th of the next month to be eligible to be declared a winner by the end of the month. And of course, the government will ask for your PAN and your Aadhaar, etc. to ensure KYC.
Easiest way of becoming perhaps a lakhpati or a crorepati here, and that too supported by the government, not illegal, very much legal, no risk involved. Mera Bill, Mera Adhikaar, of course, a scheme that the government has rolled out, will be applicable from 1st of September, but you can download the app now. But moving on, and my colleague Krishna Kumar joining us there, a major IT firm, Infosys in India, has good news, and it's also good news perhaps for all tennis fans. Rafael Nadal is now the brand ambassador for Infi. What does it entail, Krishna?
Right, at the end of the day, before we go any further, it should not come as a surprise, because the background is that Infosys has been closely involved with some of the biggest tennis tournaments, the entire ATP Men's Tour, Australian Open, to so many other international tournaments, that technically Rafael Nadal signing on as brand ambassador is a logical extension in that sense. So what has happened is that it is a 3-year contract that Rafael Nadal has signed with Infosys to be their global brand ambassador. That is what has happened. He has never signed up something like this, like a brand ambassador partnership with any digital services company in history ever. Rafael Nadal has never done it. This is a first for Rafael Nadal himself. And as part of this partnership, Infosys and Rafael Nadal's coaching team are together developing an artificial intelligence tool for Rafael Nadal. And this artificial intelligence tool will be given to Nadal's coaching team real time while Nadal is playing matches live to improve his performance. So this is part of this entire brand ambassador partnership. Rafael Nadal also, speaking of a few interesting words, complimenting Infosys, saying that he loves the way Infosys has integrated into the world of tennis and how they've contributed, using science and technology to tennis and to the community or the world community per se with their innovations. So Rafael Nadal making it clear that Infosys already has contributed so much to tennis. It's in a sense Rafael Nadal's turn to contribute back to Infosys. That's what is happening, and they are developing the artificial intelligence tool, and let's see how it goes. I'm sure all Infosys employees are only over the moon that their brand ambassador is somebody as big as Rafael Nadal, Shweta.
And if you were wondering if there's any relation between tennis and IT, here it is. Rafael Nadal, one of the biggest tennis players out there in the world, is now the brand ambassador for Infosys. In fact, he spoke to media after that deal came through. Let's quickly listen in. We'll leave you with that.
I am very, very excited to announce this partnership with Infosys. Over the years, I have experienced how Infosys helped the players to use technology on tour. I think Infosys helped to transform our sport and make it super easy for every player on the tour, creating easy access to all the data and analytics. At the same time, I know Infosys is creating a new technology via virtual reality to engage new fans, and is something that can be super important for our sport. At the same time, Infosys and I, we are very focused on do something good for the society. So I think Infosys is bringing digital skills to the society for these new generations, and we are working hard here in the academy with the new generations to try to help the kids to become, first of all, better human persons, but at the same time trying to help them to improve as much as possible their tennis skills. We care about people, so because of that, this new partnership is super exciting for me. I'm very proud of it, and I am sure we're going to do something beautiful together. Super excited about this new project, so I can't wait to start this partnership and see how far we can go in the future.
इंजीनियरिंग कर रहे हैं जो कि सभी लोग कर रहे हैं.
Coaching is now starting from grade 3, 4, 5, 6.
कोटा जाने वाली बीच राह में आधे टेस्ट देके हैं सिलेक्शन की चाह में.
ऑल इंडिया का बच्चा कोटा जाता है.
This rat race is for rats, not for humans. So why should we even be a part of it?
The Rat Race. This and more streaming on world's first new OTT. News 9 Plus. Download now.
He thought he could outlast us. And 1 year later, the evidence is right here in this room.
Who will blink first?
So far from preventing the expansion of NATO, Russian actions have actually resulted in the expansion of NATO.
It's a mess for Russia and